Reuters wrote like 30 negative articles about us in the last 6 months. And now we have
Yes.
senators in the US writing letters to us, asking questions based on those articles. Those articles are completely baseless. They have no facts. They are completely just narratives. But we got senators and regulators asking us questions. So maybe that's a strategy by somebody. I don't know, but maybe it's not. It's hard to tell. We just gotta do what we think is right. So we just gotta make sure that we always hold users' funds 1-to-1. People want to withdraw, they can withdraw. People want to stay, they can stay.
The cryptocurrency market has been faced with a lot of FUD news lately, much more than one would expect when there are macro issues affecting all major asset classes and investment instruments. Unlike for the stocks and bond markets, increased regulatory scrutiny seems to be bringing in more negative news for the cryptocurrency industry. Ironically, this is causing an unending cycle as regulators also use the negative news to increase their crackdown on the industry. On Sunday, on-chain market intelligence platform Santiment noted that the high amount of FUD being shared on Twitter is some of the highest it has ever recorded. The tweet reads, "Some bizarrely high levels of negative crypto sentiment have appeared this weekend, particularly here on Twitter. It's hard to gauge what may be contributing to one of the highest levels of FUD sentiment has ever recorded." The firm accompanied the tweet with charts showing a significant spike in bearish content across social media platforms on March 5, especially compared to the previous 9 days from February 25. Undoubtedly, popular cryptocurrency exchange Binance has been getting a significant portion of the FUD news and negative sentiments. Over the past few days, the crypto exchange and its chief executive Changpeng Zhao have been the subject of various media attacks. Last week, Forbes published an article alleging that the exchange was commingling customer funds like FTX and had moved $1.8 billion of collateral set to back its customers' stablecoins late last year. On Sunday, the Wall Street Journal also published an article alleging that Binance built Binance US to license its technology and brand in the US, while fooling regulators that the firm was independent of Binance.com. According to the article, Binance thought the move would shield it from US regulators' scrutiny. However, the Wall Street Journal maintained it had reviewed documents and messages and interviewed former employees, which allegedly reveal that both companies are more intertwined than Binance is disclosing. Whether this would be proven or not remains to be seen. But the Chinese-Canadian chief executive officer of the firm has shot down the allegations. In a recent Twitter Spaces discussion with crypto banter, CZ, as he is popularly known, discussed the regulatory crackdown on the cryptocurrency industry as well as rumors of impending massive market dumps. Before we listen to the discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also drop your comments and observations in the comments section below. Everything helps with the YouTube algorithm, so we can continue to bring you these videos. Thanks and enjoy the video. Seas began the discussion by speaking about the impending Mt. Gox payouts, which he doubts would significantly affect crypto asset prices.
Right now, it's just BUSD. So it may be just targeted about Binance. It may be other stable coins. We don't know yet. So right now, it's just BUSD. But BUSD is not issued by Binance. And because
Yes, but
BUSD is no longer available for minting, we're actually working with multiple stablecoins now. So we're working with a dozen stablecoin issuers. Some of them are US dollar based, some of them are not, and some of them are not even fiat backed. Some of them are algo stablecoins. I actually think Do Kwon actually had the right idea. He just didn't execute correctly.
so let's talk about the Mt. Gox. What do you think in terms of Mt. Gox? You've obviously been following it. What do you think in terms of the coins that are coming to market? Do you think it's going to bring substantial sell pressure to market? Do you have another view?
I have a different view. So I actually personally had coins on Mt. Gox. This is when I first got into Bitcoin. Mt. Gox was the biggest exchange. Actually, unknown to many people, I was actually offered to become the Mt. Gox China CEO at one point. I was just about debating whether I should take it or not, and then went down. I had a little bit of interaction with Mt. Gox. And then when Shibuya, Tokyo, I was there. I lived very close to there, like literally walking distance from the office. So I had money stuck there until now. I never got out. So, but look, Mt. Gox was 8-9 years ago. It's not going to have a huge impact on the crypto market, in my opinion. I could be wrong, but most of us were OGs. Most of the people who had any crypto from 2014 are OGs. I think we're okay with it.
People, all of a sudden, the average payout is $1 million. So all of a sudden, you're getting 25,000 people getting, or whatever the number is, getting $1 million in an average payout or something crazy like that. Like I just think if I was getting a payout of $1 million, no matter how much of a Bitcoin OG guy I was and how much I believe in the revolution, if I get $1 million that I wasn't expecting or that I've been waiting for 10 years, I'm going to spend some of it. And now, the one thing that I may spend some of it on is I may spend some of it on altcoins.
I actually very much agree with that concept because most of the OGs will probably have exposure to altcoins. But at the same time, though, my understanding is Mt. Gox is not giving one-to-one on the Bitcoins we held in Mt. Gox. They are giving, they lost, I don't know how many Bitcoins back then, but they lost $850 million US worth of Bitcoins, but they're just sticking with the US dollars.
I was just going to say, I think it's going to end up being about 15% of what you had in Bitcoin. About that.
Yeah, so it's not like we had one-to-one Bitcoins going to get refunded and we're going to sell like, I don't know how many million Bitcoins that was back then. But it's the US dollar value at today, which is like, we have probably 15% of what the Bitcoin value back then. So it's not like a huge amount of Bitcoins flooding onto the market. That also means 93% of those Bitcoins probably have already been spread around the market by the hackers, whoever got it already. So it's like 7% of what the hack was. So I don't think it's going to be a huge thing.
In addition to the Mt. Gox repayments, which according to newly released information will begin in September, retail investors have also shared concerns about the upcoming Ether Shanghai upgrade. The much-awaited upgrade will see stake ETHs released, and investors may be able to unstake their tokens and sell them. When asked if the upgrade would cause a large number of investors to dump their ETH tokens, CZ said he wasn't worried. Here are his reasons.
On this one, to be very frank, I have not been following all the details in that level of detail. But I spoke to Vitalik today. He doesn't seem to be worried. So, I mean, yeah.
He's not worried about price. That's what he says.
I mean, he's just generally not worried. I mean, he's a builder. I'm not worried. When he's not worried. Vitalik's one of the nicest human beings on the planet. He has no ill intentions. He's a builder. He's young. He's pure. He's a genius. So, look, I would today, if Vitalik's short on money, I will put all of my money on Vitalik. So, look, Ethereum is in good hands. Ethereum's in a good place. I think Ethereum has a very strong founder. We'll support them. We'll support the ecosystem. Don't worry about Ethereum. Ethereum will be fine.
Do you think that it is a case of the exchange that works best with the regulators becomes the biggest and best exchange in the world?
I think definitely it's not one exchange working to try to benefit themselves. I think we've seen the exchange that failed trying to do that, and even if they didn't fail for stealing customers' funds, that approach doesn't work. I think the industry is very small. None of us have reached our full potential, so the market is not saturated, and so we just got to work collectively to improve the industry. So that's the number one mandate. I think anybody who uses the word offshore exchanges are selfish, and they don't get it. They don't get the big picture. It's not about any single country. It's not about any single exchange. It's about we got to work collectively globally. We got to work with multiple regulators who have multiple different views, different agendas, different skepticism. We just got to work with all of them to try to advance the industry. Having said that, it's also not it's not black and white. Say, look, let's all work. Some regulators are just extremely hostile to crypto industry, right? So China banned crypto exchanges, crypto mining. So it's just impossible to work there. So we don't have conversations. We don't have dialogues there. I don't think any exchange really does. So my approach is we want to work with the regulators who are pro crypto and make them more successful, make them more competitive on the global economy scale, so that we can advance. And then the other regulators will have to compete and make better offers, hopefully. So that's kind of the approach that we're taking, and I think I would really hope that the industry together bind together.
What are your thoughts on the Twitter Spaces discussion and the recent events in the cryptocurrency industry? Are the market sentiments and regulatory onslaught the only reasons why prices have been consolidating over the past few days, or are we missing a bigger clue? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.